Hello traders, and welcome back to Explain the Charts. Today is November 20th, 2025, and we are diving deep into the US dollar to Swiss franc pair, which is showing some incredibly interesting price action. There's a lot to cover, from major fundamental news to a critical battle happening at long-term support levels. First, let's talk about the news driving the market right now. Several outlets are reporting that US dollar to Swiss franc is extending its gains, currently pushing above the 0.8030 mark. The primary catalyst for this move is a reported contraction in Swiss GDP, which is putting significant pressure on the Swiss franc. This economic weakness reinforces expectations that the Swiss National Bank will have to maintain its 0% interest rates, further limiting demand for the franc. Meanwhile, the US dollar is holding steady, with markets keenly awaiting the upcoming Federal Reserve minutes for clues on future policy. This creates a clear policy divergence between the dovish SNB and a potentially more hawkish Fed, which is fundamentally bullish for US dollar to Swiss franc. Now, let's pull up the daily chart to see how this story is unfolding from a technical perspective. Looking at the bigger picture, we can see a clear and aggressive downtrend that has been in place for most of the year, with the pair falling from highs above 0.91 back in January. This long-term trend has been overwhelmingly bearish. However, the price has now entered a zone that has historically served as a major battleground for bulls and bears. Let's zoom in on the price action since April of this year to get a better look at this critical support area. Notice the massive drop we saw back in April, followed by a period of stabilization and then another sharp decline in June. The price has been making lower lows for months, but the momentum has started to slow down. Pay close attention to the area between 0.7870 and 0.8000. The low in mid-October was around 0.787, and we've seen multiple tests of this zone since June. News reports from just last week mentioned that US dollar to Swiss franc was defending pivotal support near 10-year lows, and this is exactly what we are seeing. The long wicks on candles like the one from June 17th, where the price flash crashed to 0.7567 before recovering, show immense buying pressure stepping in at these extreme lows. The market has repeatedly rejected a sustained break below this area, indicating that a potential long-term bottom could be forming. This long-term support provides the context for the recent bullish move. The rally we are seeing is not happening in a vacuum, it's a bounce from a historically significant price level. The last two daily candles, for November 18th and 19th, are very telling. We saw a strong bullish close yesterday, and that momentum has carried over into today's session, which perfectly aligns with the negative Swiss GDP news. Now, to truly appreciate the impact of this news, we need to look at the short-term charts. Switching over to the 15-minute chart, let's focus on the last 48 hours of trading. This is where the story gets exciting. Coming into this week, the price was consolidating in a tight range around the 0.7950 level. Then, starting on November 18th, we began to see a significant shift in momentum. The price started grinding higher, breaking through minor resistance levels one by one. The real explosion happened as the news of the Swiss economic contraction hit the wires. You can see the surge as the price broke decisively above the psychological 0.8000 level. This level is critical, and reclaiming it is a huge win for the bulls in the short term. Throughout the session on November 19th, buyers remained in complete control. We can see a series of higher highs and higher lows, with very shallow pullbacks, which is characteristic of a strong, news-driven trend. The market pushed all the way up to a high of 0.8067 before pulling back slightly. This short-term price action is a direct, textbook reaction to the fundamental news we discussed earlier. The weak franc is the clear driver, causing traders to sell CHF and buy USD. The question for us now is whether this surge has enough power to challenge the broader downtrend. Let's go back to the daily chart to put this powerful short-term rally into perspective. This bounce from major long-term support, fueled by a fundamental catalyst, is the most compelling bullish argument we've seen for this pair in months. So, what should we be watching for? For the bulls, the first major test is to hold above the 0.8000 level. A sustained period of trading above this psychological barrier would build confidence that this is more than just a dead cat bounce. If buyers can push past today's high of 0.8067, the next logical target is the high from early November, right around 0.8108. A break above that level would be a very strong signal that a medium-term bottom is in and a new uptrend is beginning. On the other hand, the bears are not out of the woods yet. This is still, by definition, a long-term downtrend. A failure to hold 0.8000 would be the first warning sign for bulls. If the price were to fall back below the recent support around 0.793, it would suggest this was just a news-driven spike and the path of least resistance remains to the downside. A definitive break of the major support zone at 0.787 would open the door for a much deeper sell-off. So we are at a true inflection point where the short-term bullish momentum is clashing with the long-term bearish trend. To recap, let's outline the most important price levels to keep on your radar. Immediate resistance is the high of today's session at 0.8067. Above that, the next major hurdle is the early November swing high at 0.8108. On the downside, the 0.8000 level has now become a pivotal support point. Below that, we have recent support at 0.793, followed by the critical long-term support zone anchored around 0.787. So, what's my prediction? Given the powerful combination of a bounce from 10-year lows and a strong fundamental catalyst, I believe there is a 65% chance that the price will test the 0.8108 resistance level in the short term. This outlook would be reinforced if the upcoming Fed minutes sound hawkish, further strengthening the US dollar. However, if the price decisively breaks back below 0.8000 and then 0.793, the bearish trend will likely resume. And I would place a 35% probability on a retest of the 0.787 lows. Watch the price action around 0.8000 closely. It will tell you who is in control. That's our analysis for US dollar to Swiss franc. We've covered the news, the charts, and the key levels to watch. Thank you for joining us on Explain the Charts. Please remember, this video is for informational purposes only and is not financial advice. Always conduct your own research and analysis before making any investment decisions.